You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody, that music means we are back once again for a little bit of Options Boot Camp, the premier options educational program. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which so many of you folks are binging out there these days. Hope you had a great new year. If I sound a little bit different, it's because I'm still coming to you from the southern studio here, so not back in Chicago. I'll be back there next week, but for now, still coming at you from the southern studio. That's why I sound a little bit different. On the on-demand side, they'll try to pretty it up a little bit. It probably won't sound too much different, but for all of you listening live, that's the fun we're having. Speaking of live, we're going to have some fun with the live in a little bit. Of course, if you folks want to join that partay, and it's a fun partay, good time to join it. Kicking off the new year, you know where to go. Theoptionsinsider.com/pro is the place to go for all of that fun out there. Once you're there, of course, you get live access to this and pretty much everything else we do here on the network, which will be important in a second. You'll see why, as well as, of course, all the new shows we have coming up there. Great pro Q&As, options oddities to run down every week, all the weird, unusual, wild activity, and all sorts of fun. And, of course, great giveaways. Theoptionsinsider.com/pro is the place to go, as I see the folks flocking in here now for our first live stream of the new year. And it wouldn't be a boot camp to kick off the new year, which, might I add, listeners, this week, January, the beginning of January 2024, marks our 17th year of doing this crazy podcast thing. So, man, we were pretty early on this train. Man, it has been fun to watch the rising podcast tide that has followed in our wake. But it wouldn't be a boot camp without the black-hatted one himself, my compatriot, my partner in all things boot camp crime, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to Options Boot Camp for the first time in 2024, sir. How were your holidays over there at MTM?
Good, Mark. Thanks for asking. Happy New Year to you and to our listeners, and let's make it a good one.
Let's make it a good one indeed. What better way, Dan, to make it a good one for the listeners than to give back? How does that sound?
That sounds wonderful.
All right, so Dan, you know what's coming up next. You've done it a few times. You've been pretty good at it, so I think you're our reigning box-picking champion, at least for now, the crate-picking champion. You think you got another one in you to kick off the new year, sir?
I think I can do it.
Think you can do it? All right. So even though I am in the southern studio, I was able to fire up our random number generators. Everyone who's active in the pro, including everyone who signed up in the last couple of weeks there in September, we saw a lot of new names in there. So welcome to all of you. You're all automatically entered into the hat. And now Dan, not me, blame Dan if you don't win. Dan will select our winner. Mr. P, tell me when to stop, sir.
Ready, set, stop.
All right. Perfect timing. Perfect timing. All right. Let's see. Who is this person that Dan has picked? This is Roddy. Just Roddy. You picked Roddy. Maybe Mr. Roddy Piper back from the grave to win a pro trading crate. I don't know, Dan, but Mr. Roddy. I've seen that name in some of our pro Q&As recently. I think he's been around for a few months. So congratulations to you, Roddy, and everyone else who played the game in December. A lot of fun going on there. Our producers will be in touch for your fabulous prizes. I see all the names flicking in here to our first live show of the year, Dan. You get pride of place. You get to kick off our year here on the network. Do you feel special, sir?
Oh, yeah, man. This is great. I love it. I love it. I love it.
All the folks flocking into the chat saying Happy New Year. I got to see Queen, I see Nichols, all the favorites in there floating in. Welcome to all of you as Dan and I kick off the new year by looking back on 2023.
In boots. Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, let's get to it. What better way to kick off the new year than by looking back on the year that was? A lot stood out to me. I'm sure a lot stood out to Dan as well. I want to pick his brain on some of the trades, the trends, the developments, and just general what the heck was that things that really stood out to him from last year in the options market. Before we get there, though, let me break down some numbers for you, listeners. We just got them in our hot little hands right before showtime. Our friends over there at OCC, they like a good holiday. They're not giving us the numbers for the year until January 3rd, Dan. They're not working on the 2nd. No way. So
slackers.
Yes, slackers indeed. But we finally have the numbers in our hot little hands. Mr. P, I'll let you guess first off. Do you think December, or I should say, December and also the year 2023, do you think they were both record months? Do you think one? Do you think none? Do you think we had any records in there for volume at the end of the year and for the total year, Dan?
Man, geez, I haven't been looking intermittently too much this year, but yeah, I'm going to say that yes, we hit a record for the year in December. Oh, geez, I don't know. I kind of slacked a little myself in December. I'll say no in December. I'm not really sure, to tell you the truth.
A pretty good guess. Yeah, 2023 was on a trajectory to be a record pretty much out of the gate. Early on in the year, we had the first ever 1 billion contract month. We had a few of those this year. We've never seen that before in the history of the options biz. So December was up there for a seasonally quiet month, 916.2 million contracts. So not the busiest month in the history of the options biz, but certainly in the top 10, maybe in the top 5 to see. I think it's a little bit outside the top 5, but pretty darn close. 916, nothing to sneeze at, Dan, for a seasonally quiet period usually for the options market. And that means our total for the year, Dan, 2023, yet another record year. Pretty much every year, 2020 and beyond, so post-pandemic, has been a record year for the world of options. Last year, no exception. Remember, we got all excited. We hit a little over 10 billion contracts last year, Dan. Well, yeah. Pshaw, I should say 2 years ago. Pshaw to that, 2023, 11.1 billion contracts. So up another 7.1% from the year before. The year before, 10.375 billion contracts. This year, 11.107 to be precise, a billion. A couple of interesting facts along the way. The interesting thing there, equity options. So, your Apples and your Teslas, Dan, not really blowing the doors off. They were kind of unchanged, only up about 0.5% on the year. So that's not where the growth was. The growth was in ETF options, up 11.6%. So about 4 billion last year and about 4.5 billion this year. And then, of course, index options just blowing the doors off, up 33.1%. So 721 million this time last year and almost a billion total just index options coming online this year. So aggressive growth there. Obviously, all of that index growth really is coming in that 0-day side of the fence. So intriguing stuff to be found. Even futures, Dan, caught a lift this year, up a little over 1%. If you've been following the futures front, the only futures that OCC clears, at least for right now. That'll change in a couple of weeks when SIBO goes live with their Bitcoin futures. But for now, it's pretty much all VIX, and VIX was up about 1.3% volume-wise. So that's not nothing, given the fact that VIX futures have mostly been in the dumpster for the better part of the last couple of years. So intriguing stuff. Mr. Dan, does that surprise you at all?
Man, yes and no. I mean, I remember back in the days when I couldn't even imagine this sort of volume. But we've been on a great trajectory, and I think that a lot of that has to do with people just learning more about why options can be beneficial, and the truth about them, how they can control risk, and shape your risk, and add to it if you want it, detract from it if you want it, and I don't know. I guess I'm not surprised now that I think about it. No.
All right, I've thrown some data at our audience. Now it's time for your first nugget, your first thing that stands out to you, Dan, when you look back at the mad year that was 2023. It could be from an overall market, could be options, could be volatility, could be a product, could be any of the above, sir.
Okay, so there are several things. I'm going to start out with the zero DTE.
I'm not sure what that is. What are you talking about, sir?
Yeah, it's a zero dance time effect, which I don't really know. Those are the first words that came to mind. Okay.
Not bad. I'll give you a half point for that. It's not bad. A decent acronym off the top of your head.
Yeah. So yeah, the 0 days to expiration. Boy, I mean, it didn't start last year, I mean, arguably it's always been around, and definitely it started picking up before 2023, but it just really just keeps going. I mean, it's such a popular thing, and I'm pretty sure that that's where a lot of that index and ETF volume has come from as well, because they have the 1 day options listed every day. And it just took the world by storm, man.
Yeah, it does make you wonder, without that rising 0 day time, that was, of course, one of my takeaways from last year as well. It's kind of inescapable. It is the overall trend that kind of drove everything else last year. But it does make you wonder, though. I just pointed out single name options volume kind of flat year over year. So without this kind of 0 DTE boom, do you think it would have been a record year, Dan? You think maybe we would have been, again, a little over 10 billion. That's nothing to sneeze at. We couldn't even dream of that volume a few years ago. But still, overall, do you think maybe without this 0 day boom, clearly lifting index options, as you mentioned, also lifting ETF options, do you think without that, maybe it would have been more of a kind of treading water year?
I do, actually. And, we get that. There's a lot to unpack here. We get a lot of disinterest when the market is down and treading water and volatile, which of course are great times to trade options. But we get more interest in option trading when the market's up. So, I think probably throughout the year, in the beginning of the year, we probably would have slightly underperformed if it wasn't for the 0 DTE. And then there's always a lag, the last almost 2 months of the year, we had just a rocket ship of a market, and that would have and maybe will bring more entrants into the options market. But man, if it wasn't for the 0 DTE, it would have been probably an okay volume year.
Yeah, it's an interesting thing to mull over. As you mentioned, it is not new. We had expiration day trading since time immemorial for options. It's kind of goes hand in hand with the product. It's a core functionality for them, expiration, but it wasn't every day like we have now. And of course, they did go live actually the year before. So 2023 was really the first full year of them. And we also got to see the just interplay of these products, how they're starting to drive new ways to approach the market, or starting to drive maybe some new entrants into the space. We've seen a lot of back and forth on them. They're still a very divisive product. In fact, I'm going to be hosting the options panel at the upcoming Securities Traders Association of Chicago conference. In a couple of weeks, I'll have a bunch of interesting people on that panel with me, and we're going to get into this in more detail, because it kind of depends who you talk to their viewpoints on these products. A lot of people in the business, outside of the raw volume business like the exchanges and the brokers, are a little bit skeptical of these. Are they really a beneficial development at the end of the day? We've seen a lot of coverage from broad outlets like the Journal and others really playing up the lottery ticket aspect of these. So there's both good and bad. They provide more access, but also have some, I think it's fair to say, gambling connotations to them as well. We've done some polls with you folks in the past, and you folks have squarely come down on the not loving 0-day stuff, which is kind of fascinating in and of itself. But at the end of the day, the volume doesn't lie, and that makes the 0DTE, just product trend, call it what you will, clearly the number one development in the world of options, and probably going to be a big one for this year as well, as we see more products coming into that fold. We'll get to that a little bit later in some of our predictions for this year. Before we get out of last year, let's look back a little bit as well. One of the things that stood out to me last year, Dan, was just the overall death of volatility. And, if you had thought coming into this year, of course, we have a Fed tightening cycle. A lot of people at the beginning of the year, of course, were predicting a dire year, recession. There wasn't really the recipe for vol going to die. And yet that's exactly what we saw this year. VIX started the year right around 23. So this time a year ago, the beginning of the trading year, VIX was right about a 23. It ended the year a little bit shy of 13, about 12 and a half. So down net a little over 10, about 10 and a half points. If you look at it intra-year, it had about almost a 20-point range. In fact, it had an exactly 19-point range. The high came at 30.81. You could probably guess when that was. In fact, Dan, I'll let you guess really quickly. When do you think the high, you don't have to guess the exact date, just the range when you think the high for VIX came last year?
Well, I mean, in recent memory, I'm thinking maybe towards the end of October, because as I recall, the market sort of dipped a bit then before just,
That's a good guess. That's probably would be my number two guess. My number one guess, which turned out to be the right one, was mid-March. Remember all that contagion fun? That's when we spiked back up over 30. We got up to 30.81. I think it was March 12th or something like that. Right in the height of all those contagion fears. So early in the year, we actually had VIX kind of spiking from a 23 up to almost over 30. And then that was all she wrote. And the low, ironically, Dan, came when you would expect it to in the height of seasonality, mid-December, 1181. So it actually exactly 19-point range on the year, which is kind of weird. We don't see that too often in vol land. Nice round numbers. It made it hard for our vol prognosticators. We just revealed the results of our crystal ball contest on our Volatility Views program. We had no winner this year. It was such a wide range, a 19-point range, that there was no one within our margin a bit. We even expanded. We moved the goalpost a bit to be nice, Dan. And even still, no one even came within even half a point. And at that point, we're like, well, this is just getting too wide. We're not going to give you a prize for getting it within like a point. That's no fun. So, yeah, no one won our vol prize this year, Dan, which was kind of surprising. Which, by the way, I will need to get a end of year VIX prediction for you at the end of this show. Which, by the way, spoiler alert, Dan, you did not win with your prediction for the end of the year VIX either. I know you were looking forward to winning the vol prize this year, Dan, but alas, no prize for you, sir.
Oh man, always a bridesmaid, never a bride.
Maybe next year. Maybe next year is your year. So start thinking about your VIX prognostication. We'll get to that in a little bit. One thing our audience did get right, though, Dan, was we asked them at the end of the year, so pretty much the beginning of December, 1 month to go, where will VIX close at the end of the year? So it was a 1 month VIX guess, a little bit easier. We gave you 4 ranges, north of 15, between 13.5 and 15, between 12 and 13.5, and below 12. And our audience got it right. They guessed between 12 and the 13.5, and we went out right around 12.5. So that was the right guess. I think a lot of that was recency bias. That was pretty much exactly where we were trading when we posted the poll. So folks just guessed right around here. And it turned out to work. 42.9% choosing that. 22.4% were expecting a little bit of a banger end to the year, north of 15. We started flirting with that, then not so much. 18.4% said 13.5 to about 15. And 16.3% of you were looking for a snoozer to end the year below 12. Thankfully, that did not come to pass, even though we were pretty darn close to us. All right, so Dan, I talked about the volume numbers. You talked about 0DTE. I talked about the overall death of volatility for this past year. What else stood out to you in the mad year that was 2023 before we get to some of our predictions, sir?
I mean, just the super big picture stuff. Like, I remember at the beginning of this year, I was talking about the immaculate disinflation of the seemingly impossibility of the Fed ending inflation without putting us into a recession. And holy cow, man, we're a lot closer to that reality. Might happen, and boy, I hope it does too. But I don't know. I sure was very surprised by the very dovish comments around the last Fed announcement. And so I wonder if that has to do with the Fed looking at some numbers and thinking, oh, we might have overdone it. I don't know. It's just been a very, very fascinating drama as far as the macroeconomic picture this past year. And it's been fun to follow, man. It's been fun to have some puzzle to solve every day like that. And I don't know, probably the first half of 2024, we're still going to have that. But, we can't do any predictions yet.
No predictions yet. So you're getting ahead of me. I was kind of actually distracted while we were talking by our chat. Just a love fest going on in the chat. Everyone saying Happy New Year. What a nice bunch of folks we have in there, Dan. They're just distracting me with all their kindness while you're just the black-hatted one, as usual here on the show.
That's not what you were saying earlier about them.
Shh, we don't say that out loud. All right, let's keep looking. I'm kidding, of course. We love all of our pro folks out there. Let's do it now, Dan. You've drawn us dangerously close to the fire. Let's just dive in with some of our predictions, our outlooks for this year. We have to start off, Dan. We just posted our annual sentiment poll for VIX, where VIX will close at the end of the year. A whole bunch of people dove into that. A lot of people want to win the Vol Prize this year, so that's great to see. And we also gave you our regular way to play on Twitter, which, of course, if you're not following us at Options, you're missing out on all this fun. But a whole boatload of people will chime in there, Dan. I'll reveal the results of our poll, and I'll give you a chance to mull it over. And at the end, I will ask you for your specific VIX close for this year. So maybe, who knows, maybe you too can win the fabulous Vol Prize. We gave you folks 4 ranges, as we always do. And it's always interesting to watch how these ranges evolve year after year as well, because VIX and Vol evolves. And so our poll evolves with it. This year, our range is a little bit lower, as you might expect, given the fact that I just told you Vol sold off a little over 10 handles net on the year. We said right here where we were when we posted this, so between 12 and 16, or higher, between 16 and 20, or spicy, that's a spicy meatball, north of 20, or just absolutely boring, below 12. And Dan, I will reveal the results, then you get to pick. The winner of our poll this year was higher. Again, over thousands of you voting on this year. 35.9% choosing between 16 and 20, Dan. So they're feeling a little bit more juice to end the year, which is kind of interesting. Again, there's some stuff on the docket this year. We'll talk about that in a second. Whether that persists through December, that is the question. And then right here where we are right now, somewhere in the 12 to 16 range, coming in number 2 at about 29.5%. So if you go the between 12 and 20 range, that's 2/3 of our audience. Again, that's a big range for VIX. And then 19.6% of you saying it's going to be a boring end of the year below 12. And then 15.1% of you saying it's going to be a spicy meatball, Dan, north of 20. So there you go. I have revealed our results. I have bought you more than enough time, sir. What is your specific VIX end of year prediction for 2024, sir?
Like a very specific exact number?
Yep, like 18.54, whatever the hell you want to say, whatever floats your boat.
I'm going to say 16.31.
16.31. Look at you getting very precise out there. I like it. All right, listeners, are you down with that? According to our data here, looks like a decent chunk of you are down with that. A little over a third of you are saying 16 to 20. So you're in Dan's realm. We have a whole bunch of you. We're going to be nice listeners, and even though the poll has ended now, we're going to extend your individual voting through the end of this week. So you'll have through this weekend to get your specific picks in. I know our producers won't like that. We've already had thousands of you writing it. They have to track all this stuff, but we're trying to be fair. It's a whole year prediction. A few more days won't give you any leg up, and it gives a lot of you a chance to play. I mean, we want all of you. We want someone to win the Vol Prize. So let's get out there, see if someone can win it this year. Again, at Options is the place to go to make your voice heard. You can also send in your VIX pick if you want to questions@theoptionsinsider.com. Of course, if you're in the pro, you can just put it in the live chat. We'll get it all there as well. But most of you are going through DM or just replying to our poll with your specific VIX pick. All right, speaking of vol, Dan, we had some other interesting trends on vol because coming up next year is obviously an election year. So we've been going on about Fed ever since the pandemic. I don't know about you, Dan. I'm kind of tired of talking about the Fed, but I think we got I think we got one more year of the Fed coming in behind us. But now we get to add the extra fuel to the fire that is an election year. And we all know those are very quiet from a vol perspective. Nothing happens in an election year, right? So along with our poll, our buddy, Mr. Vixologist, who's been on our Vol View show many times, Jim Carroll, he put out his own poll, kind of piggybacking on ours. And he asked, where do people think VIX will peak in 2024? He gave them 4 ranges as well: 25 to 30, 30 to 35, 35 to 40, or north of 40. And Dan, north of 40 took it with 40.3%. So a decent chunk of the audience is thinking they're going to have a banger year this year. We didn't sniff 40 last year. I told you the high was 30.81. So 40 is nothing to sneeze at. Followed by 28.3% saying 25 to 30 is where we'll top out. That's a fairly reasonable range, all things considered. 17% say 35 to 40, and then 14.5% say 30 to 35. So Dan, are you on board with that? Do you think we're going to have this aggressive vol spike? And in general, what do you think about vol during an election year, sir?
I am on board with the above 40 for sure. And yeah, I mean, this election year, especially, I think, has a whole lot of potential for a lot of volatility. I'm just going back, I'm pulling up some charts, just looking in the past. I mean, well, actually, you know what, man? In the last 10 years, we've been above 40. Geez, man, 3 of those years only? No, this can't be right. That doesn't seem right to me, does it? But I guess it is. I'm still sticking with my bet above 40, just because I think that there's a lot of potential for this election and everything that goes along with it to give us some pretty high volatility at some point.
Here's just some extra data for you, Dan, if everyone else listening. One of our other guests on Vol Views in the past also chimed in on this debate. Bill Luby over there at Vix and More. He just with some data for you folks. Kind of getting to what you're just talking about, Dan. He said the mean high for VIX is 38 for its full history, the entire history of VIX. The median is 35. On 4 years, the VIX never closed any day as high as 20. That's in the entire year. So all this argument about the long-term average is 20, I've always taken issue with that. On average, the VIX tops 40 about only once every 3 years, Dan. And only 3 times in the past dozen years has VIX topped 40. So he kind of posted that data in response, actually, to that other poll. So intriguing stuff. People have this perception. Obviously, we've all seen it go to 80 and not that long ago, Dan. So we all remember that. And that kind of sticks in our head. But in reality, it doesn't get above 40 very often, which, again, makes the upside call argument sometimes a little bit more challenging. Along those lines, speaking of vol polls, Dan, looking out for our predictions for this coming year, we are in the middle right now of our annual sentiment poll, Dan. We always ask our audience the beginning of the year, then we do checkups in the middle and at the end of the year for their sentiment for the year. Where are they feeling? And how are they feeling, really, from an asset allocation perspective? We gave, again, our same question. It changed the categories a little bit, but mostly the same question. We said if you had to buy a 10% out-of-the-money call expiring at the end of the year on one of the following asset classes, which one would you choose? We said, so volatility could be VIX or VXX, any of those products. Or equities, you pick your poison. We don't care. S&P, Qs, doesn't matter. Or fixed income could be the 10-year, whatever you like. Or crypto, Bitcoin, ETH, Solana, whatever floats your boat. Mr. Dan, what is your answer? Which of those 4 would you buy the 10% out of the money call on? And then B, more importantly, what do you think our audience is voting for?
Oh, boy, man, that is a tough one. I mean, I don't think any of the equity indexes is a crazy thing. I mean, I guess theoretically, my answer to the question for VIX before that would put us 10% higher. So I guess I should be saying that. It's funny how when you're posed questions differently, you think about the answers differently. Bitcoin is not a crazy answer either, because if and or when we get the ETF, there's just, I mean, it doesn't make it a more credible asset, but there just has to be more demand for it. But how much of that is already priced in? Oh, goodness gracious. I guess I should be conducive with my last answer. I'm going to go with the VIX.
I say you got to go VIX if you're feeling a spike above 40, right? And yeah, our audience agrees with you, Dan. Overwhelmingly, 44.8% choosing VIX. Again, we're hanging out at a 12 handle. That's not a crazy, outrageous bet. 10%, 1.2 points. VIX can do that in a day, right? That's not the craziest bet. Equities coming in number 2, 29.3%. Can both of those be right in the same year? That'd be interesting. Fixed income coming in a distant fourth. No love for that, 10.3%. And Dan, we put crypto back in here. In all of our polls last year, crypto came in dead last. We kind of thought, should we take it out? And I thought, given all the love for crypto right now, we got to put it back in because all this heat around the ETF. And now crypto coming in third, Dan, a pretty decent third, 15.5%. So folks are a little bit of Twitter, a little bit of buzz about this whole ETF approval thing. So there you go, listeners. That's at Options. That is our annual sentiment poll, which is live right now. You folks can play along there, make your voice heard, and we'll see. We'll see if you folks are correct. We revealed some of those results. In fact, if you want to hear the full results for all of our questions of the week for all of last year, what you folks thought on all of the hot button issues facing the world of options and volatility, you're lucky because we like you folks. Even though there were no new live shows earlier this week, we gave you a New Year's special where I sat down and broke down all of those results for you. Some surprise, in fact, a lot of surprises in there. In fact, we even put it out, I do believe, to the Options Bootcamp feed. So you folks got a little bit of an extra holiday bonus. I hope you enjoyed that. We collect a lot of interesting data here, and we like to share the results with you folks, surprising as it often is. Some of the other things we have to look forward to, Dan, before we get out of here for our first part of our doubleheader. Remember, if you're listening live, second part coming at you immediately. For the rest of you on demand, it'll be coming at you next week while I'm traveling back to the Chicago studio. But Dan, the question everyone's asking, you said it was your number one takeaway for last year. It certainly was mine as well, which is zero DTE. We've been polling on this all year last year. Will we see more zero DTE? Dan, I put it to you now. You get to be the ultimate decider. Do we see more zero-day products this year? And more importantly, where are we going to see them? Are they in single names? Are we going to get our Apple and Tesla VIXs? Are we going to maybe see more commodity single day? Where are we going to get all this zero-day love?
My answer is yes. I believe we will see further expansion of the zero DTE. I think it will continue in the most liquid names, whether that's indexes, ETFs, or equities, and probably a smattering of all three. As far as commodities, I don't know. I don't know about that. But for the equity space, absolutely, I believe we'll see that continue because you know what? The bottom line, like you think about it, the nature of corporations is they have to expand the business seemingly at all costs, right? So it doesn't matter if zero DT is good or bad for the general public. If it provides economic value, that drives volume, that drives prints, like as in data that gets sold. It makes money for shareholders, and so they're going to expand it. That's what I think.
Yeah, I've often said if it makes dollars, it makes sense. I still don't think. I mean, maybe towards the end of this year, I still think the Apples and the Tesla zero day is still a long way away. They need to solve that fundamental problem. Either they get rid of the after hours contra exercise, or they create some new cash settled version of Apple and Tesla. But one of those has to happen first before we get the single name zero DTE that everybody wants. So that's why I'm still probably leaning not this year for your Apple and your Tesla zero. I know everyone wants to see it. The exchanges, trust me, want to see it. That's going to print money for them. But some of the folks behind the scenes manning the plumbing, like OCC and others, are a little bit more circumspect about doing this. So I think that's going to gum up the works. I think we will see more. We're already starting to see more in the commodity space. CME's been leaning hard on more near-dated liquidity in products like WTI, so I would not be surprised to see pretty much an explosion of 0-day in the energy complex over there for them this year. And crypto already has some 0-day love. They're going to add more, I think, as we go along. So if you're looking for more 0-day fun outside of your SPX and some other big indexes, probably going to have to look at those two for now, but we'll see. Sometime probably in the next, I would say, by next year, I think we probably could have the single name thing tackled. But I think they'll definitely get there because, as Dan mentioned, that does make money and it does make sense from a dollar's perspective. But outside of that, it's an interesting question. Other interesting question, Dan. Last year I mentioned the spike for VIX came in the contagion fear meltdown that came around March of last year. Nobody had that on their bingo cards for the year. It was the kind of unknown that sent the market into a tailspin, sent vol spiking. So the question everyone's going to have this year, Dan, and I put it to you, what's the contagion fear of 2024? What's the thing that really maybe spooks the market, maybe gets us to what you said, that VIX pop over 40 that you're anticipating, Dan?
Oh, man. Yeah. I mean, I don't like to be a Debbie Downer, but I mean, I think the election is probably the most likely thing to lead to intensifying volatility as the year progresses, especially towards the end of it.
Are you possibly hinting that an election cycle between Biden and Trump could somehow turn toxic? How could you say that, sir? I'm stunned. I'm stunned by your words. I think it would be peaceful and a happy event for all mankind. But yeah, you're probably right. That's the known unknown. There's probably an unknown lurking out there too. We shall see. Maybe we'll have to do a poll on that. What do you folks think is the unknown? But we're coming up against it, Dan. We got to get to episode 2. So right now, though, before we keep going into our second episode of our doubleheader, if folks want to reach out to you, they want to kick off the new year, Dan, with a little bit of mentoring, a little bit of coaching, where should they go? What should they do?
Yep, it makes a great New Year's resolution. We had a couple people just join and with us within the last week. So you can make your way on over to markettaker.com and just plop it in the questions box or the contact us box. And even if you're just curious about one-on-one coaching, just ask about it, and we can have somebody give you a call and see if it's a good fit. No pressure, and if it's a good fit, we'll get you going and on the right track for 2024.
There you go. Check them out, markettaker.com. Don't forget the second T for Theta is going to do it for us on episode 1. If you're listening live, hang out. We'll be back instantaneously in your ear holes for the second episode. If not, if you're listening on demand, we'll see you back here next week. Another episode of Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.